Good morning, everyone. Last class of financial services, we have started credit rating meaning and we have seen the credit rating advantages. Okay. So today in this class, this is also related to a credit rating only. And in this class, we will discuss limitations of credit rating. Okay. As always, I used to say that each and everything used to have a two phase. One is good, one is bad. So good already we have discussed. Now the term is for bad. Okay. So first limitation, if we'll go here, we have biased rating and misrepresentation. Okay. So there is a chances, okay, if the quality rating is not done, fine. If the quality rating is not done, or there is a chances that whichever company will have the low grade rating, okay, they will not definitely they will not advertise or use the rating while raising the fund from the public, and at the end of the day, in such cases, investors will not get the information about the level of risk related to that instrument, and they will may lead towards the loss, okay, loss of their own investments. So that is one, okay, limitation. Next we have static study. So just like maybe bookish study, we used to have all the data given, and on that basis we used to try to calculate, and then we used to try to just forecast that maybe this will happen in the future. Okay. As in your credit rating also, rating is done on present and the past historic data of the company. Okay. And then credit rating company, whatever they are going to give the rating, that is actually a prediction. Fine. And that's not always going to be a long lasting. Okay. Because anything can happen after assigning the rating to the company. Okay. Because there may be the changes will take place in your economic environment or in your political situation, where at least in India, hats off to political situations, okay, government policies. So these all things may take place after the rating, and definitely it is going to affect the working of a company. And when it is going to affect the working of the company, whoever has invested their money, their investment will also, returns on investment will also get affected. Okay, so that is another limitation. We will check the next. We have a concealment of material information. So maybe which company has approached the credit rating agency that we want our this particular instrument to get rated. Okay, so when the investigation team of the credit rating company will arrive and try to collect all the informations from the company, there is a chances that company might conceal material informations, that company might hide the material information, and in such cases definitely quality of rating will suffer. Okay, it will be not a reliable one. And when the quality of rating only suffered, and then investors are going to believe on that rating, because it's not a mistake of credit rating agency also, it actually you can say that it is a purposefully default from the company side only, but at the end of the day it is going to affect your investors interest only. Okay. Next we have a limitation. Rating is no guarantee for soundness of company. So there is no guarantee for anything. Fine. Because how to say, that certificate matching with the quality of company or its management, not always possible. You just take a simple example. Fine. Your exams happen, you get your marks card. Okay. And then suddenly somebody used to talk about another person that, hey, he was not, or she was, okay, anything, okay, he was not so intelligent, how come he got 99? I know he was asking here and there, he was looking here and there, or something happened, maybe some cheating he has done. We all start our guessings, okay, because we are not ready to believe on that marks. Similar way here also, rating is not a guarantee for soundness of a company. It's not that if any company got the A rating, then company will definitely do the very well in the market. Like for example, I'll tell you from Google only. Okay, there was once upon a time CRB Capital Market. Okay, which actually had the turnover of rupees 1,000 crore per year. Definitely not a small amount. Okay, and they have even got the credit rating also A, capital A. But after that also they failed in the market. So there is always risk. It's not at all a guarantee. Fine. Next we have limitation, reflection of temporary adverse condition. So maybe time factor, which is always we believe the biggest factor. Okay, always while giving a kind of, you can say, statement also we used to say time will tell you, time will show you. So similarly here also time factor definitely affect the rating sometimes. Okay, because maybe sometimes what happen, just for example, company in a particular industry might be temporarily in a adverse condition, and because of that it got a low rating. Okay, but what happened, company's interest got adversely affected. Okay, so time factor always present there, which may damage your interest. Next we have difference in rating of two agencies, which happen generally in India. Okay, because rating done by the two different credit rating agencies for the same instrument, okay, of the same issuer company also, in many cases maybe not identical. One credit rating will say it's a A, another credit rating will be say it's a B. Now which one to follow and how to go for the investment, definitely a difficult one for the investors. So though credit ratings are having the so many of advantage, though credit rating used to help the investors to take their decisions easily, but same time credit rating is having some limitations also. So we have to check before investing in any company both the side of credit rating, and then only we have to decide. Because if I'm talking about the India, in India especially among your CRISIL, CARE and ICRA credit rating, so there is no uniformity. Okay, they all three maybe for the same identical instrument or same issuer, they are going to give you the different ratings, low or high. Okay, so it create a problem for our investors because they get confused which one to follow. Okay, and always keep remember, even just now as I gave you the example of CRB Capital Market with a turnover of rupees 1,000 crore per year with a credit rating A also got failed, and unfortunately that time neither the SEBI or nor the RBI, nobody came to rescue the investors. So loss always belong to the law. How profit belongs to the investor, but at the time of eating profit, maybe other parties also come. But loss totally belongs to the investors only. Okay. So actually, the credit rating agency in India lacks transparency. Still, we need a strong system. Okay. So these are your limitations. Go for it. Next, today we will check one more thing, that is your factors. Which and all factors you have to consider when you're going for a credit rating, or we can say when credit rating agencies come to go for your static studies. Okay, which and all factor they used to consider before giving or before assigning the ratings. Okay, where very first we have a business analysis, that is your analysis of various types of risk which are involved in the operations of the company. Okay, and it include your industry risk, in which industry you are, your market position of the company, okay, or the legal position of the company. If I am saying that industry risk, then maybe your nature of what type of competition you are facing, or what is your success factor, what is your demand and supply position. If I am saying about the market position, then what is your market share, what is your competitive advantage, or how is your sales and distribution network. If I am saying that operating efficiency of the company, then what's your location advantage. Okay, how you what about your cooperation from the laborers, If I'm saying about the legal position, then what are the terms you have in your prospects? Okay, what are the responsibilities of your trustees? Okay, so and how you do the, or what are the protection measures you used to take against forgery? These all comes under your business analysis. Okay. After this, we have a second, that is your financial analysis. So financial means your accounting, earning. Okay, so what your accounting quality, what are all your earning protection. Okay, how much you are adequate with your cash flow, how much you are flexible with your finance. Okay, if I say the accounting quality, then which type or which method of depreciation or income recognition, okay, you follow, or how you treat your bad debts. Okay, or how you do your inventory valuations. Different methods are available, so which method you follow. Okay, because each and every method used to have their own advantages and disadvantages. Okay, that will definitely affect your accounting quality also. And if I am talking about the earning protection, then what are your sources of future earning? Okay, what are your sources of future earning? And we can say how much you are able to pay the earning per share. These all they are going to analyze. Fine. If I'll say cash flow, then what's your working capital management? Okay, what's your current ratio? What your inventory to sales? Okay, because these all factors definitely somewhere going to get related with your cash flow adequacy, whether it is adequate or not. Okay, if I say that financial flexibility, then what's your ability to raise the fund? Okay, and or you can say that what's your capital financing plans? Okay, these all used to get covered under your financial analysis. So proper financial analysis is also necessary for credit rating. Then next, if we'll check, okay, next factor we have management evaluation. Simple. Okay, track record of your management, who all are in the management, how they used to work, their you can say their qualification, their experience, or how they got promoted, or what their background. Okay, or which type of planning and controlling system they follow. Fine. Or you can say the how your management is how much your management is able to meet the adverse situations, or how they used to tackle it. This all comes under your management evaluation, how they are going to run the business. Okay, then next factor is your regulatory and competitive environment. Okay, so definitely you will have a structure and regulatory framework, and then efficiency of your operations of regulatory authorities, reactions of your on these things of your competitors. Okay, reactions of your competitors to the regulations whenever it happens, and how they used to react and how you are going to manage it. Okay, that shows your efficiency of operation. Okay, in relation to your regulatories environment or authorities. Okay, then next and last we have fundamental analysis. Okay, under your fundamental analysis, they need to analyze liquidity management, which should be in the terms of your capital, then your structure, then long-term solvency. Okay, or your cash inflow and outflow ratio analysis. These all will get covered. Okay, it's like actually quality of the asset in terms of credit risk management. And what about your receivables of current assets? These all will get under your liquidity management. Maybe they are on same time they are going to analyze your profitability. Okay, your historic profit, definitely your historic profit they are going to consider, or spread on funds employment they are going to consider. Okay, profit margin they are going to consider. Okay, and then definitely they will go for your interest and tax rate changes. Okay, because impact of interest and tax rate changes on company's profit, like if the interest and tax rate get changed, then how much it will have the impact, or what type of impact it will have. Okay, on the company's profit. Fine, because the potential for future earning and the impact factor of debt burden, these all need to be analyzed to assure about the perfect returns for investors. So whenever any credit rating agencies are called for credit rating, minimum these 5 factors they always used to analyze, and after that only they used to go for assigning the ratings. So for the day, this much. Go for the limitations and go for the factors. Okay. Next class we'll try to learn something else also. Till then, thank you. Have a nice day.